We had some good news out of the Middle East today, with oil moving lower despite falling dollar as Israel and Lebanon agreed to a ceasefire deal. This is, of course, a great humanitarian perspective piece of news, and it does have some big moves in the market happening right now. Basically, oil prices moving lower. U.S. officials on Monday reported Israel agreed to a ceasefire deal with Lebanon, even as it continues to bombard Beirut, while the Hezbollah militia fires rockets into northern Israel. Oil prices rose 6.3% last week as Israel maintained its wars in Lebanon and Gaza, while Ukraine launches first strikes into Russia. So tons of geopolitical conflict, but any progress, any move towards peace is going to have a big move. Let's check it out. So here's a 15-minute chart taking a look at the price of oil. You can see a huge drop here. And interestingly enough, as always, this stuff seems to come out right around just as the New York session starts. I don't know why this happens so often, but it seems like we get big geopolitical news right as the stock market opens up. I never really fully understand that. Take that as you will. Of course, gold prices are also lower here. Silver prices down 3%. I mean, big slide for the precious metals. Of course, in response to this, remember that gold is a bit of a safe haven asset. In fact, it's the ultimate safe haven asset. People buy it when they're concerned about geopolitical conflicts, about elections, about uncertainties, about all sorts of different things. So today, with that uncertainty sort of being lifted, we see a slide in the price of gold, trading at $26.37 at the time of me recording this video. That is a big drop here in a singular day. In fact, one of the biggest down move days that we've had in a while on gold. Now, if you're asking yourself, is gold going to go higher? Is gold going to go lower? I'll give you my personal opinion on this. My personal opinion is I really don't have a strong opinion on gold at these current levels. If you get a huge decline in the price of gold, I may start to look at, long-term buys, but in terms of active trades currently, there is really not a big decisive factor here for me on the price of gold. If anything, I lean more on the bearish side. And the reason I say I'm more neutral is because the price action here looks pretty dang neutral. We see, sellers coming in, pushing it lower, and then buyers are ripping it higher. I don't see the same clear upward trend that we saw going on during this time over here as we see on the right-hand side here. So we see more of a market neutral move currently. So when we look at the price of gold, what would get me more on the bearish camp would probably be a break through these lows at $25.60. If you see a big breakout to the downside, then yes, it's possible that sellers are in full control. And the reason I say fundamentally I'm leaning a little bearish on this one is because we've got some factors that we've got to address. GDP growth in the United States is still relatively strong. Services PMI have been upbeat and continue to be upbeat, which of course, by the way, is a very important indicator to the state of the economy. If purchasing managers are forecasting a stronger economy down the line, that is usually a forward-looking indicator, and it still remains very strong outlook from U.S. businesses. And the consumer seems to be hanging in there with continued strong retail sales as of 2 weeks ago. And the labor market still seems relatively robust at 4.1% unemployment. That is historically a pretty low level of unemployment for the United States. So all of that brings me to the state of the US dollar. And although it's down here today, the strength in the US dollar has been a muting effect to the price of gold recently. A strong dollar is typically not very positive for the price of gold. And the reason the dollar is strong is because of some of those data points that I just showed you. The US economy seems to be holding up, not just holding up by itself, but stronger relative to its peers. In fact, last week when we take a look and zoom in over here on the European PMIs, what we can see is European PMIs missed forecasts last week, both on the services side as well as what we see here, the manufacturing side. What we see is that the euro dollar continues to have a pretty strong downward trend going on despite the 1% gain today. We still have to kind of zoom out and take a look at the full context. The euro is in a big downward trend. And I've talked about this a lot, but today on stream, I discussed heavily the concept of retail sentiment. And I want to play that clip because I thought it was really important. But before we play that clip, let me also remind you that our Black Friday sale just got started. This week, we're offering 40% off the Edge Finder, which is where we get all of this market data I'm about to show you. And if you're interested in getting yourself a copy, it's a one-time fee, and it is our lowest price of the entire year. If you'd like more information, there's promo codes and information down below in the description. And if you have any questions, you can use the link in the description to chat directly to a member of our support team who can help you get more information about the tool. Check out this clip. we've got price going down, right? Everybody knows euro dollar's been tanking recently, but look at this. I built this net retail positioning, which takes the long percentage minus the short percentage. And you can actually see, look at this. Retail has been building a long position, right? This is a daily snapshot that the Edge Finder captures and puts on this screen for you. So we've got retail sentiment getting more and more long. And what is price doing? Going more and more short. I happen to know that James, who is in the stream and a regular stream viewer, he knows I'm coming at him with this right now, because we know you use another product for this, but we made it better so that you use our product. That's we got to earn such a established traders business every day, it seems. But check this out. So we added a chart where you can actually see the price of euro dollar over time, but you can also see the net positioning over time of this instrument. In terms of a retail positioning. This second table down here shows you the long to short percentage rate over time. And you can actually see, this is interesting. So as price has been going down recently, retail traders are piling on longs on euro dollar, and it's not going well because euro dollar has been tanking. You can see in the price. But we find that interesting because with everybody on one side of the boat, everybody is trying to buy this dip and the dip keeps dipping. Momentum traders out there, like James, who I know is DCAing into euro dollar shorts, has been making some great money just riding that downward trend. And it's based on data. So when we just looked at euro dollar, right, we talked about euro dollars in free fall. And it can be tempting when you look at this to say, look, euro dollar is in a downtrend, or it's sold off a lot, and I want to buy this thing because it's going to go back up, right? That's the theory that a lot of times gets traders in a lot of trouble, because it does not have to go up. Just because it's been going down for a while does not mean it's time to now go up, right? There are such things as getting oversold, overbought, but trying to call that is incredibly difficult. And again, going back to our sentiment tab, traders are inherently very bad at picking when the market is actually going to turn. You can see retail traders throughout this entire downward trend that we've seen for months now. Retail traders have been piling on longs. They've been holding on to the bag, right? As they say it in trading land. This thing's been trending down, trending down, trending down. Meanwhile, retail traders are buying, buying, buying. And it's, of course, a very losing approach to just be buying this downward trend. So how can you use that as a trader? How can you use this data piece as a trader? I'll tell you what I look for. If I see everybody is piled on to the long side on the retail trading front, I'm going to continue to look for primarily short side action, right? I'm going to go with the momentum of the market and go against where I see retail traders piling up. And today I've got another bonus clip here for you that I thought was really important and worth mentioning. We discussed today how the Japanese yen is a bit of a piggy bank for the global financial markets. This is a question I often get about the Japanese yen and people who are trying to trade Japanese yen currency pairs. This clip might help you out. Check this out. But the question is too, with the Japanese yen, we always come back to it, is like, what's the global situation in terms of global outlook? You saw a little bit of PMIs out of Europe come in weak. So euro yen, especially here, pound yen, these ones, the UK also had weak retail sales. So pound yen taking on a little bit of water here against Japanese yen. But the bigger question is, what does the macro situation globally look like? Because that's the thing about the Japanese yen. The Japanese yen is very much sensitive to the whole world's economy. Because of its role as the piggy bank, if you will, for a lot of hedge funds and borrowers, right? So what a lot of funds do, it's known as the carry trade, is a lot of funds will go borrow, aka sell Japanese yen in order to fund their ventures in other places, whether that be stocks, whether that be bonds, whether it be other currencies. And by the way, if you need to go buy, if you want to, let's say you're a hedge fund and you want to make a return. So what you do is you say, I need to borrow money. Well, the Japanese yen is going to cost me very little money to borrow that money. So I go sell that. And with the money I borrow from the Bank of Japan, what do I go do? Well, let's say I go over to let's say I want to buy bonds. Let's just say I want to buy US bonds. And here's a scenario. You want to buy US bonds. Okay, what do you buy US bonds in? US dollars. So you actually need US dollars, and then you can go buy US bonds or stocks or whatever. But the point is, where did this come from? Well, it said we need to sell Japanese yen, buy dollar, and that's the scenario. But the caveat here is that whole trade reverses course if things get ugly in the world. So what happens is, instead, if things are ugly, you own bonds and you say, oh, I need to get cash because I don't know what's coming next. And so the trade reverses and everybody goes long yen. So that's why it's global, because you could also do this for UK bonds. You could buy German bonds. You could buy German stocks. You could buy UK stocks. You basically, it's the world's piggy bank is the Japanese yen. And that is why we always keep an eye on the global situation if you're going to try and value the Japanese yen. So inherently tricky, but the pound yen, euro yen dropping here recently makes a lot of sense with the recent weak PMI data out of Europe. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.